Just when you thought it was safe to get back in the water, we have all the action that took place at the end of last week and the action that's coming into this week. We have this week the Nasdaq rebalancing on Monday morning before opening. We've got the Fed with their reporting on Wednesday. We got the PCE on Friday and a bunch of companies reporting earnings this week. It is going to be anything but slow this coming week in terms of the news. I won't even have time today to talk about the companies that are reporting this week. I'll do that on a daily basis on my regular show in the morning. This is Randy Kirk. Hit like if you like, hit subscribe. You want to hit notify because you want to be reminded every morning that you can 7:10. I try to get it out by 7:10 and give you an analysis of the opening bell, what's happened in the first 10 minutes. And even as I'm on the air, as I'm trying to produce this particular thing, I then give my last report at like 5 minutes of the hour, and then by 10 after, I try to have it up and available to you. So hit notify so you get notified when that comes out immediately. All right, let's, and then of course, join Patreon. Happy to tell you, I think I passed 75 today. Thank you, everybody that's joining. I'm trying to get to 100 by the end of the month. Your help would be valuable. I have a bunch of new reports there, a bunch of new spreadsheets on every division of Tesla, what my expectations are from now to the end of the, at the end of the decade. And that'll be up there just for Patreon right now. And please, it's free, 7 days free. Check it out, see what you think. All right, let's jump into it. On Monday, we start off with the S&P flash on the manufacturing and on the services. On manufacturing, it's expected to actually go up compared to last month from 46.3 to 46.7. It's not a very big increase. That would not be good news for the Fed. They would like to see manufacturing flat. And meanwhile, services, they're showing services coming down. That would be good news for the Fed. I'd be surprised by these results. I'd be surprised to see manufacturing up. I'd be surprised to see services down. If it's the reverse, it would be, both of those down would be the best thing for the Fed, obviously making the decision Wednesday. I'm expecting the absolute reverse of what I'm seeing here in terms of manufacturing still being down and services being up. Nothing I'm seeing, I don't know where they're getting these expectations. Nothing I'm seeing suggests that manufacturing is up or services are down. So then the other thing we have on Monday, I'm sorry, this is on Tuesday, we have Case-Shiller Home Price Index. That is coming out, suggested it'll be down 1.6. Every indicator of what's happening to housing prices in the United States and rents in the United States right now is showing that housing is down compared to last year. The only thing that doesn't show that is the CPI. The Fed is relying on the CPI when everything else is saying that housing is down. They are still counting that as a major component of why they're going to raise interest rates this Wednesday. This is not going to change their mind unless Case-Shiller comes out at like 1.0. Maybe that would be a cue. Maybe that would be something that would cause them to think again. I don't know. Consumer confidence is out that morning at 10 Eastern. That is suggested it's going to come in strong at 112 compared to 109.7. Yes, everything I'm seeing right now suggests the consumer is increasing in confidence. They have jobs. They've got regular income. They're not expecting to lose their jobs. They have money in the bank. They've made money in the stock market. Their pension numbers are up. So yeah, consumers are pretty happy right now. That would be good news, except it's not good news for the Fed. The Fed would like to see the consumer stop spending, and they would like to see the consumer run out of money, that would and lose their job. That's what the Fed wants to see happen before they're going to stop raising interest rates. All right, on Wednesday, we start out the morning with new home sales. Here you go again, a massive drop from 763,000 last month to 717,000 this month. Now, these are just speculations. This is just what the street's expecting, but they do have a lot of data to pre-run this one. So it's easier to kind of figure out where this might show up. What I'm going to suggest to you is this is expected. We have the lowest amount of inventory historically ever. We already had the lowest inventories ever going out of at the end of the pre-pandemic period. We already had historically low inventory numbers because nobody's moving out of their homes, because grandma and me, grandpa too, we want to die in place. And then all of a sudden we have these interest rates going to 7 and people sitting on 3%, 4% interest rates on their mortgages. Why would they ever move? Not a chance. So the Fed is trying to fix something that can't be fixed by raising interest rates. It is not going to change as long as these interest rates are high. Every aspect of it fundamentally makes zero sense. Explain to me in the comments below if you can figure out any way that raising interest rates at this point is going to help produce lower prices on homes. Not a chance. Isn't going to happen. Okay, next, we got the Fed coming out at 2 o'clock. No question that they're going to raise it 25 basis points. The only question left is at 2:30 Eastern time. The chairman will come out. By that time, I think we get to see the notes or something. But when the Fed comes out, Fed chairman comes out, he's going to give his analysis, and hopefully he's going to be somewhat dovish. If he says no, it's a lock, or we're really inclined to raise rates again in September, because remember, there is no meeting in August. So if he says it's pretty much a lock that we're going to raise in September, that will hurt the continuation of the next leg on this really good market that we're in right now, this bull market. If he comes out slightly dovish, then I think we could see a continuation of the bull. Hard to call what all that's going to mean on Monday morning. On Thursday, we have initial jobless claims. Last week, they were surprised going down to 228. The expectation this week is back up to 236. That would still be very, very strong in terms of the economy. Then we have durable goods orders. That's coming in at 1.2, which would be a drop from last month, 1.7. We'll see if that actually takes place. But at this point, the Fed will have already spoken, so the market is probably not going to pay much attention, except they're going to be looking for strength in the overall market right now. Given that we have a month and a half before the next Fed meeting, I think the Fed's going to be more interested in seeing growth in the market. So a bad durable goods order, in other words, missing by this 1.2, it would probably not be good. On the durable goods minus transportation, that's an important one. And last month it was up 0.7. The street has not made their estimate yet on that one. I would expect that one to be up nicely as well, because overall, I think durable goods are doing okay right now. The GDP advanced report will be coming out. This is showing at 1.7%. Last month was 2%. 1.7 is pretty strong. The Fed thinks it should be around, or will be around 1% for the second quarter. We'll see. 1.7 would be strong and would be good for the market, but not so good for Fed decision making. Then we have the U.S. trade balance in goods. No estimate by the street right now. Advanced retail inventories, no estimate, and advanced wholesale inventories, no estimates. We would be looking. The goal would be for these inventories to start dropping so that manufacturing can pick up. But who knows? I have no clue on what my expectations would be there either. Pending home sales expected to drop 0.5. One more piece of same data, same information. Housing is going to be like this. Prices going up. Rents are going to flatline, are going to stay flat because there has been some new rental properties put on the market. But in single family homes, no. Prices going up at least through early fall. On Friday, we get personal. Well, okay, so here's where we get the PCE. To remind those of you who that have been around for a while, but maybe have never paid attention to the PCE, and for those of you who are new, the PCE index is an inflation index that the Fed likes better than the CPI. And they like it better because it's maybe a little closer to current, and also because it measures things in a way that they right now feel is more important to them in analyzing whether it's right to raise interest rates or not. So what you're going to get there is you're going to get the personal income in terms of it's kind of just a statement of what people are getting in their pocket. The street is looking for a 0.5 increase in personal income. Now we've seen some strength in other places in terms of what people are getting in the paycheck. So that would be higher than last month, which was 0.4. I think the Fed would like to see it a little lower. Personal spending, they're suggesting come in at 0.5 also, compared to last month, 0.1. So very strong spending. Again, consumer confidence. Plus it's summer, people are out spending money on vacations. Then you've got the PCE index itself. Last month it came in at 0.1. And this month the street is not making any speculation on it. I'm going to say that I think 0.1 might be the same thing, might repeat at 0.1. Core last month was 0.3. The street thinks it'll come in at 0.2. This would be a good reading for the Fed. I'd like to see this one come in just even a little lighter, maybe 0.1.5. Maybe we could see that come in there. Year over year, the basic PCE last time was at 3.8%, way too high for the Fed. The street is not making an estimate on that. And core, the street is estimating 4.2 after last month 4.6. So the 4.2 number would again be too strong. I'd like to. I think there's a real chance, you'll see in a minute, that this should come in lower. That'd be amazing if it does. And we've got a whole nother reading in August before the Fed has to make their next decision. Then you have the employment cost index. Last month that came in at 1.2. The street thinks it'll come in at 1.1. That would be light. I would be surprised to see the employment cost index only going up 1.1. And then consumer sentiment. Again, consumers are feeling pretty good right now. The street is expecting that to be flat compared to last month. It was 72.6. They're saying it'll be the same. All right. Since this, I only bring this up once in a while, but since this month we're talking about everything to do with inflation, what I want to do is bring up I want to bring up the USA Trueflation report in detail here, give you what they're saying right now in a little bit of detail, because I think it's important for you to see the details on this. Okay, so right now Trueflation is at 2.33. Obviously, if we were at 2.33 right now and the Fed thought that was true, this would be one and done for sure. But I have mentioned a couple of times now, there's a possibility that we could see inflation begin to pop up again in a more normal way, because the overall situation, we're getting past the COVID reaction, the shutdowns and all the problems with inventories and not having enough products and overseas problems with getting ships in and all that kind of stuff. All that up and down stuff is kind of worked through the system now. So we'd like to see inflation continue down here. And what we're seeing right now is a minor blip. It's been straight down. Let's take a look at this big straight down. Look at that. Is that lovely? Just straight down. But we have a little tiny blip here at the end. But it's important to see, why is that blip happening? And it's all in food and non-alcoholic beverages. You can see that we're up almost 1% compared to a week ago, almost 2% compared to last month, and 2.56% compared to last quarter. You can see the overall index. You can see the chart here. It's really easy to see how there's this tendency going up on food and non-alcoholic beverages again. Love to see that start to pull down a little bit. I can't see anything in commodities or elsewhere. We'll talk about that in a minute. There's a little increase in corn and wheat, but not enough to justify this much increase. But there is the second category that is up is transportation, which does flow through to the foods. Okay, so let's go to transport. When you look at transport, you see this is also up. Yesterday, it's up half a point from a week ago, quarter point, down from last quarter, but it has been showing a little bit of an increase. Why is that? Well, that's because oil is up. So when oil is up, that's going to move through the entire food and beverage area. But on housing, if we go back to that real quick, housing is what we're expecting. I'm sorry, I've lost my place. Go back to housing, and we see that on housing, we're still down across the board. Okay, well, up 0.15 versus yesterday, but a week ago, last month, last quarter, you can see the trends. You can see it's all downhill. This is the biggest component that the Fed is still concerned about, and we could go down through the rest of these. I don't think, go to Trueflation yourself and read through this. I looked at all the commodities, which are also on here. Let me show you how to get to the commodities. You go up here to the methodology. I'm sorry. To developers. I'm sorry, resources. Go to resources. I'm really good at showing you how to do this, right? Go to solutions. go to economic data. This is they need to fix this so that people can read it. And right here, you can go down and see rice and cocoa and soybeans and heating oil, and right down the line here, most of these are well down. Most of these are directly down. There's a little bit of an increase in some of the food categories. Almost all the commodities are down, but look at all the information you can get here. Just go to trueflation.com. No, they are not sponsoring me. No, I don't make a dime off of saying this. I'm telling it to you as something that if you really want to be on top of what's going on, this is a great place to get on top of it. So let me stop sharing and go back here. So you can kind of get a clue as to where we're going next week. Now we want to talk about what's really going to happen to the market. Well, the first thing is that we have no idea what's going to happen tomorrow morning. If you've watched the show, you know that tomorrow morning we're going to have the rebalancing take place. The Nasdaq rebalancing takes place before the opening bell. We should be able to see before the opening bell, we should be able to see something in the pre-market in terms of what's happening with the Nasdaq Magnificent Seven, including Tesla. One would hope that this has all been worked out last week, that the different indexes have been rebalancing all week based on what their expectations are, and that therefore tomorrow this would kind of be over with and we wouldn't have to be thinking about it anymore. But that is not necessarily true. And so we could see some more action in that direction tomorrow morning. And so it's really hard to guess what's going to happen tomorrow morning. By the midday, though, by 10 o'clock or so, I would think it would be starting to straighten out and people will start to focus more on what's going to happen Wednesday, because that's the big deal, and all those reports that I just mentioned to you. So where will Tesla go? Where will the Nasdaq go? Well, when I looked a few minutes ago, and let me just double check right now to see if it's still true. When I looked a few minutes ago, the Nasdaq is now slightly up and the Dow is down slightly. Bonds, the 10-year is now up. So all the bonds are up, 2-year, 2-month, 10-year, it's all up. So, everybody's anticipating what's going to happen, but the Nasdaq being up and the Dow being down again, this is more back to normal and kind of what I would be expecting for tomorrow morning, only in a much greater degree. I would expect some kind of a bounce from last week's big sell-off, for the last 2 weeks, big sell-off, seeing the Nasdaq regain its legs again, and seeing more of the Dow stocks falling off just a little bit from their big gains that have been taking place the last 2 weeks. That's kind of where I'm looking for it. I'm looking for Tesla to be very, very subdued. I don't expect to see wild swings in Tesla this week. I expect it to be subdued. It could trade back up a few points back towards 300 and then bounce back down to 255 and then back up and try for 275, try for 285. Those have become resistance points now. So be paying attention to where these resistance, if you're a trader, 275 and 285 and 300 are the three mechanical. You don't have to figure out anything. You don't have to go and look at any other kind of methods of figuring out where these resistance points are. Those are going to be resistance points. But the fundamentals of Tesla are amazing. They just showed how amazing the fundamentals are. The fundamentals of Tesla are going to be just fine in the third and fourth quarter. That's why I've put up that new analysis showing you the third quarter and fourth quarter. It's up on Patreon. I will do that YouTube for the third quarter. For 2023. I will do the rest of 2023 probably tomorrow, maybe Tuesday before I get to it. But I will put that up and show you where I think Tesla is going in terms of earnings, in terms of shipments. I'm pretty sure that we're going to be okay. Looking for probably a 10-cent increase in earnings in the third quarter, and then a nice increase in the fourth quarter, but I'll give you that detail later next week. So what did I leave out? Don't see Tesla going to 300 until we get the numbers at the end of the month. Those are the beginning of next month on the 2nd. I don't expect those to move the stock very much. Right now, people are concentrating because Elon said it was going to be an off month in terms of production. An off quarter in terms of production. I don't think that the market will move that much based on sales coming up on the 2nd. Now, if the sales are rough, not nearly what people are expecting, and Tesla reduces prices, yeah, that would make a difference. If Tesla increases prices, that'll make a difference. That's going to really, really have a big impact over the next couple of weeks. Obviously, if there's any news with regard to Cybertruck, any news with regard to the Highland announcement, any news with regard to anything about the things that are coming up in the world of Tesla, those could move the stock. But the number one thing, watch for those price increases and decreases, because that's going to give people an indication of, will we have another beat in the third quarter, like I say, maybe up 10 cents on earnings, or will we be flat or down? That's how people are going to be thinking, I think, right now. Having said that, I still think we're headed towards 300 early in next month. I think we'll be beating up against 300. And when Cybertruck handover is announced, we start going towards 350. I think I've talked myself into the point where I'm losing my voice today. So please hit like if you liked it. Please subscribe. Please hit notify so you'll be notified of tomorrow morning's program. Please buy the book, and sign up for Patreon so that I can hit my 100. Okay, that's all I got for you. It's been great talking to you.